Fala pessoal, sejam muito bem-vindos a mais um episódio da Let's Open Podcast. Dessa vez a gente vai conversar em inglês porque o podcast é internacional e eu já vou começar já aqui o papo para facilitar para todo o público que está vindo consumir esse episódio. So hello everyone, we're starting here one more episode from Let's Open Podcast. My name is Gabriel Pereira, I'm your host here, and every week I'm interviewing the industry leaders from Open Finance. And not only from Brazil, as you can see, we are getting international. And today I'm more than happy to receive Ivo Jeník representing CGAP. And it's a pleasure to have you here, Ivo.
Thank you, Gabriel, for inviting me.
So we already spoke before, like a few months ago. And you were here in Brazil trying to understand what we were doing, very excited about industry players, about open finance in Brazil, and actually how excited about how the community was helping each other, everything was going on. So receiving you here right now to discuss what you learned, what you discovered during this time, it's a pleasure. So it's great to have you here. And for you guys that are listening to us today, we're going to discuss a research that CGAP did about open finance ecosystem in Brazil. They have a lot of interesting findings and insights that they're going to share with us here as well. And before we just dive on this, I'm going to try to, as always, to explore a little bit about Ivo, about CGAP, try to understand this infrastructure and what are the point of view of this player, this international player, and why open finance is interesting for you, and especially why Brazilian open finance is interesting to you. So let's start with the people. So tell me about you, Ivo. So where are you from? Let's start to understand Ivo before all this finance stuff.
Absolutely. So my name is Ivo Jeník. I am Senior Financial Sector Specialist at CGAP. I'm originally from Czech Republic. That's where I was born, where I grew up. But I've been living in the United States, working for CGAP since 2015, based in Washington, D.C. My background is in financial sector regulation. I actually started my career working at the Ministry of Finance in Czech Republic on banking regulation. Then I worked briefly in the industry. I was in-house counsel and compliance officer at an investment startup company in Czech Republic. And then later on, I moved again back to the government and eventually made it to the United States and started working at the World Bank and later on at CGAP.
Amazing. And for us that are not familiar with the CGAP and the World Bank, I'd like to understand the role of them, the institutions, and what are your goals and what do you do in these two organizations?
Right. So CGAP is a financial inclusion-oriented think tank and research organization that is hosted by the World Bank. We were set up in mid-90s initially to help coordinate investors and funders of microfinance, but since then we have evolved into, I would say, more diverse organization in terms of our areas of interest. So while we are hosted by the World Bank, we have over 30 member organizations who are our funders, and those are bilateral and multilateral organizations, development, financial institutions. I could name few, but I don't want to pick just few of them. So over 30 of them that are providing resources to CGAP and sort of helping us to run that operation. Now, everything that we do is focused on financial inclusion and how we can advance financial inclusion, how we can bring currently there's a 1.4 billion adults globally who are excluded from the formal financial sector. So how we can bring those people into the formal financial sector and how we can help those people who are already included to benefit from financial services more. I think the important thing is why we do that, because it may not be obvious. It's not that being part of the formal financial sector is great or having access to formal financial services is great on its own, but we know that when people have access to financial services, they can be more resilient. They can seize a different economic opportunities. They can have a better lives economically and otherwise. Our vision is responsible and inclusive financial ecosystem that enables green, resilient, and equitable world for all.
And I would say that uh, there's not a shortage of projects that you that you can do. Unfortunately, uh, you can you have a lot of countries that have opportunity to improve like the financial inclusion. Of course, Brazil is one of them. And how it's this worldwide landscape right now, and how is this outlook? How you manage to select a project or other project? How you work with this?
That's very interesting because the landscape for financial inclusion is evolving. There's been quite a bit of success over past decade where about 700 million people were brought into the formal financial sector. Um, and that happened largely due to innovation, such as mobile money, for example.
Yeah.
And so at CGAP, we are hopeful that this trend can continue. And as there is more innovation, more technology, new technology becoming more available and accessible, we can achieve even further advancements in financial inclusion, which is also where open finance comes into the picture. Open finance is an enabler for innovation. I'll just give sort of a specific example of the great successes we've seen in the past. I mentioned mobile money, but generally access through financial services through digital channels is becoming a significant contributor to financial inclusion. And so at CGAP, our role is to kind of recognize what are the key trends in innovation, but also what are the key enablers to that innovation to happen. You typically need certain infrastructure, you need certain market maturity, you need certain policies in place, customer awareness and readiness. And so our research very often revolves around those questions. If there is an innovation that is an opportunity for financial inclusion, how do we make sure that that opportunity happens? What it would take? And so that's also why Brazil is very interesting, because Brazil has been working on a lot of interesting innovation initiatives, including open finance, and we want to see what kind of effects it has on financial inclusion.
Actually, I think recently you published a really broad study about infrastructure. I'm not sure about the title, but I remember that I sent to my audience as well. Um, and I remember to see exactly like uh, what kind of infrastructure in each country helped to develop better financial inclusion and more innovation. I think I don't know, maybe 2 months ago or 1 month ago. I'm not sure.
Well, it could be also colleagues from other part of the World Bank, but of course, infrastructure is becoming a big topic. The whole concept of digital public infrastructure is becoming a really important in the financial inclusion space and beyond. I don't know, you might have seen during the India G20 meetings.
Pretty sure.
So maybe that's
Yeah.
what you've seen. There have been like public pledges and commitments to fund development of digital public infrastructure, which typically means ID systems, payments, and systems for exchange of data and information. So, it is becoming part of what we are working on, though we argue that it's not only about the infrastructure, it's actually about the whole ecosystem. So in many ways, you can think of infrastructure as something that's built as a tangible part of how the society operates. It used to be roads and electric grids. Right now, it's becoming more of the digital components and technological stack. But we think it's very important to lay over also policies and regulation that not only kind of provides safeguards so that innovation doesn't cause harm that's intolerable by the society, but also to ensure that infrastructure benefits excluded and underserved segments. Because, even in the past, sometimes infrastructure is built, but for only certain parts of the society can really benefit.
Yeah.
And I think it's partially the reason why we see such a large amount of people excluded from the form of financial services. Our theory is that the digital public infrastructure, if built properly, can address that issue and can be built so that everyone can really benefit. In many ways, by, for example, lowering the cost of entry for new players, for fintechs, for example, right? If you can already put your solution on the top of the existing infrastructure, your cost is lower. And I'll just give one example. In India, which is very famous for building digital public infrastructure.
The India stack.
The Indian stack, exactly, India stack. One layer in that stack is digital ID, Aadhaar. And that ID layer has helped to drop acquisition cost for acquiring customers from about $9 to about 40 cents. So you can imagine what impact it has for smaller institutions who can now not only acquire customers for a lower cost, but also can go down the market and serve customers who are lower income, lower margin, lower annual returns.
You don't have to be a viable consumer, you don't have to spend a lot of money. So
right.
You have more services that can be done.
Yeah, and you expand the market going down. So that's great.
But I'm pretty sure that the landscape wasn't like this, wasn't always like this, because right now there's a lot of things happening at the same time, and I think that if you go for vacation or anything like this, you miss a lot of launches and new stuff that's happening in different places in the world. And how was in the beginning, I don't know, if you have this idea 20 years ago or something like this, to develop ideas or studies about financial inclusion in I don't know, in an era that was pretty much slower than what happened right now, because my sensation is that the things are happening really, really fast, and I don't know, maybe the studies, they can get outdated if you don't go fast enough. If you can publish something that it's outdated, if you take a lot of time to review the information and to make it public. So how is the difference between the beginning of developing intelligence for financial inclusion 20 years ago, I don't know, and right now?
I'm smiling because you're kind of assuming that I was around 20 years ago working
no.
on the same topic. And I also hear you're worried to go for a vacation that you mentioned you were going to, that you might miss something. So my personal perception is that you're right. Things are speeding up and a lot of things are happening at the same time. And I see this a lot playing out in the regulatory space. So I did not say, but I do work a lot with policymakers, regulators, supervisors. And I think their world has become really challenging because 20 years ago, they would focus on the traditional part of the financial sector, right? They would know how to regulate it, the macroprudential and microprudential regulation and integrity and financial consumer protection. And now, and sometimes they would have new things coming, like I mentioned microfinance or mobile money, right? So that's one thing, and you kind of study it and you decide how to regulate it. But now you have not one thing, but you have 20 different things, crypto assets, open finance, crowdfunding, AI-driven financial advice, you just name it, right? And so it does feel like a lot of things are happening at the same time, and I think we are searching for the right frameworks to cope with that change so that we don't miss the opportunities, but we also don't introduce risks that we would regret later on. So I think it is challenging. You asked specifically from the research perspective. You are in the content development business, so you know exactly the challenge of getting things out soon enough, but making sure that they also last long enough. And we have this very thorough process of deciding what we're going to focus on, because we want to focus on things that have lasting impact and that will not outdate so quickly, like big trends, sort of the next big thing. And I must say that so far, CGAP has been quite successful, because some of the earlier notes on microfinance or on regulatory enablers for digital financial services, things around agents, etc., they're 20 or so years old, but they are still valid for that specific segment or for that specific thing that they talk about. So I hope that, somebody else coming here 20 years later would be able to say the same about our current work.
Amazing. And the word is changing, because you imagine that people are asking, I don't know, the guy from opening the AI in the Congress what they're doing. So like Zuckerberg, and ask questions like that they have to understand some subjects. They probably say, hey, this will never like be part of my day, but
before you know,
bad news. Now you have to deal with this. So it's interesting. So let's talk about countries and try to understand developments as well. Looking to these landscapes and in these trends, what you're seeing that's interesting in countries. We talk a lot of people that Brazil is being a benchmark for other countries. Is it true? What's going on in other countries? What you can say for us about your perception?
Mm-hmm. I would say definitely globally there's a focus on technology and how technology can make people's lives better, right? So in the financial inclusion space, that basically translates into how we can use technology to solve for some of the hardest financial inclusion challenges, which is that people operate on low incomes, people don't have IDs very often, people are not visible to the financial sector, so it's very hard to design services that they need, and it's very hard to deliver those services to them because they are very often living outside of urban centers. So there's a great hope and generally movement around the world to see how technology can help to solve for these issues. One specific area that we have chosen among few others, but one that I can speak for, is how data can help to solve financial inclusion challenges. And of course, it cannot solve for everything, but we see great potential of leveraging what we call digital data trails that people basically leave behind as they interact with their devices, with government, with financial service providers, with utility companies, social media, etc. How these data trails can be used to benefit the customers by designing better services, better financial services, and cheaper financial services to them. And we actually did a global research just to kind of market size who are the people who are excluded from the formal financial sector, who live on low income, which is $5 or less a day, and yet who leave a robust digital data trails behind. So we sized that at about 2 billion people who are... Yeah.
Just understand, they have to have low income and high digital data traits on.
Correct. We call them digitally included poor, which means that they are part of the digital economy already.
Yep.
Typically through access to smartphone or some version of connected phone, and yet they are living on a low income, and 1/3 of them is completely excluded from the formal financial sector. Now, of course, when we look at what kind of data trails they leave behind, I don't know what is the right word, but let's say what kind of data trails are associated, you would see a little differences between different income segments, right? But the bottom line is that those people are part of the digital economy. They are visible if we look at the right, in the right direction, and their data can be used for design and delivery of financial services. And so that's why we are excited about the use of data in open finance regimes generally, because we think this is a catalyst for financial inclusion through data. So
I'm pretty sure that of this 2 billion, I think a good number is from Brazil, because uh, I always heard that we have like the biggest numbers of percentage of people that use social media. So we are really keen on using stuff online, sharing data and connecting stuff. So
Well, so that's what our study also shows, that in Brazil there's a high smartphone penetration,
yeah,
right? High connectivity, so many people are online quite frequently, and so that's absolutely key enabler for data to be produced and then used to benefit the customers. Maybe one thing to mention is that we just did my colleagues did this calculation, basically estimating that if we bring that 1/3 of digitally included but poor people into the formal finance sector, that lowers the current exclusion rate from 1.4 billion people to about 800 million people, right? So it's like significant, almost 50% reduction of financial exclusion if we only can figure out how to use the data.
it's like 3 times the population of Brazil. It's
There you go.
almost
It's a large number.
yeah, it's a lot of people.
Yeah.
So let's go to the research. Let's talk about it. So, what was the idea and why this research here in Brazil, and also if it was the first about open finance, you were doing other research of open finance in other countries, just to understand this context, and then we can put the numbers and when we can dive in of the insights and other stuff.
Yeah, absolutely. I'll give you the sort of the history overview and
Yeah.
and just provide some context. I'll also mention colleagues who work on it because I really like to kind of put a spotlight on.
Yeah, I
on them
already
too.
saw the work, and it's impossible to be done by
A single person. Absolutely. So the whole journey on open finance for us actually starts with open banking, as you can imagine. A couple of years ago, my colleagues Ariadne Plaitakis and Stefan Stashen, they studied back then the few existing open banking regimes in the UK, Australia, a few other countries, just to kind of understand how open banking regimes are designed. So they come up with, these are 12 critical design elements, and kind of talked about what open banking is and how it works and why it's important for financial inclusion. So that was a while ago. Then we added to it specific research. So again, Ariadne and another colleague, David Medin, they work on the topic of data protection and customer privacy protection, basically, as an important component. So again, looking at what's happening around the world, how different countries are going about data protection, because we think that without data protection, there shouldn't be much of data sharing, because that really introduces a big risk. And now the team that's led by Maria Fernandez Vidal and joined by other colleagues, Arisha Salman and others, is basically trying to advance this research into the open finance and understand what happens if it's not only about banking data, but also other financial services data, and hopefully in the future also mobile money data, telco data, internet data, utility companies data, etc. Because we kind of understand that if we talk about financial exclusion, then open banking on its own probably won't help that much. And why I'm saying that? Because open banking is about opening banking data. If you don't have a bank account, then it doesn't really help you. But once you start adding those different data sources, that changes the game quite significantly. And so many people know about, many international audiences, I would say, know about the initial leaders in open banking, such as the United Kingdom. But I think Brazil has established itself.
Here in Brazil, I think we look a lot of we look into UK a lot of what they are doing, the documentation. I think the first reference that we have.
Yeah, I imagine, because I think besides doing the actual stuff, they've done a really great job in
Yep.
promoting their innovative ideas, be it regulatory sandbox, innovation hubs, or the open banking. So for many countries, I think for a long time, it's been a reference point. This is how open banking is done. But at the same time, there's been a challenge in implementing and adopting open banking in the UK. The initiative was set up to promote competition, to allow people to switch accounts. That has never really happened that much. And now finally we see a stronger uptake and more use cases develop, and small businesses using open finance. Whereas in Brazil, the uptake rate and the whole implementation pace is much faster. And I think, Brazil has established itself as a leader in the open finance world. And so we wanted to understand how that happened, and also where Brazil is in the uptake, awareness, the implementation, kind of set a baseline so that we may in the future come back and do this again and kind of start mapping out the journey and start identifying what are the enabling factors, what are challenges, because many countries are now looking at Brazil. They're still looking at the UK, of course, but they are
Yep.
looking at Brazil, and they want to know, okay, what did Brazil do well and we can replicate. So
We're going to do the specifics, but to be honest, I think you have, I don't know, 60% that can be replicated, but you have around 40% that it's very specific. And if you don't have a central bank with the specific conditions and a certain amount of banks and concentrations, and so you have to to align all these factors to make the things happen. And it's interesting to see other countries, each one doing it by in your own way, like US going to the other side and now trying to regulate. It's interesting.
yeah, just to say, this is what I really like about the work at CGAP, that we have this, in a way, luxury to look at different markets and try to figure out what are commonalities, what seems to be working across, and where are those differences that are just driven by specific nature of the market, regulator, etc., and try to distill something that is meaningful from that. It's an interesting challenge to have, and a lot of kind of thought-provoking conversations. Just to say, we actually do think that there is a very strong story, if I may say, around in the enabling layers, if you will. Part of it would be infrastructure, but it's not only about infrastructure that has to be in place before open finance can have the impact it potentially have. So you do need to have some layer with digital accounts, right? So you need to have some basic infrastructure.
Yeah, you mentioned the data protection as a
right. One example, right? Or what Brazil did really well is bringing people into the formal finance sector through social payments, right? So opening accounts, getting people some government support, especially during COVID, that has brought a lot of people into the formal financial sector. So you need that layer when people are connected, where people have accounts, and then of course Pix as a fast payment system. That's a huge enabling factor for the open finance, because that allows people to start generating data trails. And so you can probably implement open finance in different stages of development, but when you have those 4 or 3 strong payments related layers in place, that means that open finance will likely have a bigger impact.
I'm not sure if I'm getting ahead of the conversation, but one thing that I think it's maybe Brazil and in other countries like more in development as we are, like I think the economic situation and all the asymmetry in the market, it's also a driver for open banking adoption as well. Because a lot of people want to receive credit, because in Brazil you have a lot of people that have access to credit, but other part of the people they don't have. So people want to try to figure out a way to to solve this. You have a lot of videos on YouTube that tells people how to raise your credit limit. So in your credit card, how you can raise your limit. So people, you have like influencers that only do this kind of stuff. So
Oh, really?
it's a it's a very specific stuff. We don't have companies like in Europe that people they have this kind of, I can like, we have this value proposition to increase your, build your credit score. We don't have this in Brazil yet. At least I don't know any specific name. But you have a lot of these gurus that give tips for people, like how you can do this by yourself.
And does it work? Have you tried?
To be honest, I don't think some stuff it's really basic. Like you can get, you need more relationship with that company. You have to pay bills using, so it's a basic stuff. But I think is you have so many demand of people trying to understand how to get this. That's really impressive.
So in our study, we actually found that, and it's anecdotal evidence, of course. One lender was able to improve visibility of borrowers' income by 30%. In other words, without following those advice, people would now be, their income would be now 30% more visible to the lender just by using the open finance data. So that just kind of illustrates the power of data sharing.
We're going to the, I separated a few questions about the study, and I separated it in 3 topics, and I think we can discuss right now. The first one is the current stage of implementation. The second one, the existing and emerging case studies in Brazil and what the banks and fintechs are doing and what's going on. And the third one, the customer awareness and adoption. And I know that you interviewed more, I think 2,000.
That's correct, yeah, 2,000 individuals.
Yeah, so I know that I have a lot of work on this research. So let's begin. First, with the stage of implementation. So in terms of number of participants, the data sharing and adoption, we have like big numbers, like more than 40 million consents. And how this compared to other countries, and how, what was your feeling when you found those numbers?
Yeah, so 27 or so, I think, is the latest number, million consents in Brazil, where 41 million accounts linked to open finance. I talked about the UK, right? So let's use that as a reference point. There is currently 7 million users of open banking in the UK. In India, we haven't really talked about India yet, but it's a regime that's not really called open finance, but they have the account aggregator system, which is very similar. The logic is basically same for data sharing. So there's about 25 million accounts. So, you can say those numbers are high, but when you compare to the size of the population, Brazil is leading with the 16% of adult population, or of population being included in the open finance. In UK, it's 13%, I think, and in India, it was around 2 or so. So that gives you a perspective of why we think that Brazil is a leader in this space.
And it's one thing that I like to provoke people is that we're talking the actual numbers of people that get to the end, they have success in the journey. And we know that it's not everyone that get to the end. So the number of people that have
trying,
it's much larger. So I know that during the interview, so we spoke a lot of people, a lot of banks and institutions. What were the challenges that people were sharing with you during this time in Brazil? So, I don't know, data quality or anything else. What happened during this, what people shared during these conversations?
Mm-hmm. So I just want to make one thing clear, that we did interview about 2,000 individual users, so basically customers. But then we also spoke to industry representatives, so we got that picture as well. And as you rightly pointed out, one challenge is the consent conversion ratio, right? So how many people try and how many people succeed in granting consent and then getting something in exchange. So that is something that's improving, but we see a few challenges around that. The whole customer journey. And honestly, I should say that, as every research, our research as well reveals area that will require more research, right? So there's like never a definitive answer, but more questions. Yeah. So we do see that there is a high attrition ratio. So people try and then they sort of fall from the consent process at different stages. We don't necessarily know why. It could be the UX and their customer experience.
The UX is not the. You have a lot of steps.
Right.
Even in the best journey possible still has a lot of steps for for 2023 UX top of mind,
But honestly, when I think about it, there is also this notion of steps definitely are important, but how those steps play out. Well, I can imagine that you just change your mind, and I have had this experience several times in different contexts, right? When you say, okay, I'm going to sign up for this, and now you go through it, and I was like, okay, they're asking me this and they're asking me that, and I need to consent to this. You know what? It's not worth it. And I think that one thing that our study clearly points to is that people still needs to be convinced that this is worth it. This is worth something that they're getting in exchange.
But you don't think that it's the same logic that you mentioned about the cost of identity? Like maybe if you lower the cost of sharing the data, you could provide more benefits, like the people gonna see value. Because if the cost of sharing data is really high, so a lot of bad UX and a lot of stuff, people are expecting something really, really, really meaningful in the other side. So maybe they will not receive this. Like maybe they're gonna share and they are not receive a better credit offer because the data is not possible to give a better offer. I don't know.
Yeah, that's a really good point. And it goes to the question of how you mature, in a way, this kind of ecosystem which requires everyone to participate and everyone to contribute something. Because you're right, if you build something, you invest as a financial service provider, but you can rely on the ecosystem to provide data, then the customer's expectations are not met. Customers may not come back. They may not renew their consent. They may not see the value going forward. And so how then you grow the ecosystem in the long term? That's a big part of what we are trying to understand, because, again, the study clearly shows that what kind of moves the needle from customers unwilling to share the data to customers willing to share the data is what we call a value proposition, right?
Yep.
When customers see what he or she is getting in exchange for the data, then they can make evaluation and say, is it worthwhile? And some of them do and decide to join. The typical use cases where that happens is when I get a better credit, I get better terms, larger amount, better tenure.
Yeah.
So if we have more of those use cases and people are like, okay, I need that, I want that, and I'm willing to share my data for that, then the system will mature.
Still looking for this stage of implementation. What do you think about the best way to measure impact or measure like what's really going on in an ecosystem? Because sometimes people use API calls or number of consents or like number of institutions. I don't know. None of them, all of them together. How do you think it's a good way to see if it's like a vivid ecosystem or not?
Mm-hmm. Well, you're asking researcher, right? So my answer is the more the better. And by the way, I really like the dashboard that you can access here in Brazil and see what's happening, how many API calls.
Maybe you saw the last version. Now it's beautiful.
Yes,
Because the first one was ugly.
Well,
I'm sorry, guys. The first one was not that beautiful, because this one right now
it's really good.
Yeah,
it's really good.
It's essentially the same data. I think they have more information right now. Like they have a ranking from payment initiation and other information.
Yes, so I was about to say that they're actually adding to it a more data points, so you can disaggregate, and finally we may be able to even see why the payments initiation, for example, doesn't go through.
Yeah.
What are the reasons? So that's amazing, and I think that's really going the right direction, because as you're asking, if you just look at the API calls and maybe success ratios, and conversion ratios, that's a good start, but you still don't quite see the story behind where we want to eventually get. By we, I mean my colleagues and me at CGAP, with the impact studies that we were planning to do in the future, is what is the impact on the lives of customers, right? So speaking of the financial inclusion, it's great to have a lot of API calls, but how is it helping the individual person?
You can just make, of course, people are not doing this in purpose, but if you want to make it look good, you just put a lot of API calls in some stuff that is good, and you make 99.9% working, and basically you can solve the the KPI with this.
Right. So we want to see behind what is behind those numbers. And one important point that we focused on a lot in our study is how that uptake, awareness, and all the indicators affect different segments of population based on gender, age, etc. So
that's a good thing. I was supposed to ask about case studies right now, but I'm gonna change the order, because I was looking to the study, and it was interesting to see how the awareness about open finance changed about regarding the income of the population or the education. I would like to understand how this awareness of open finance in overall, how it was, and how it changed in different demographics.
Mm-hmm. Yes, so this is something that I would maybe call a risk of not only open finance but also other innovations, that you build something and you build it only for a certain segment of the society.
Yeah.
And very often that segment means men, urban, rather young, and affluent, right?
São Paulo and
exactly.
Yeah.
Yeah. And so when we look at innovation and its impact on financial inclusion, we always ask, who are the people using it and how they're using it? And so we did ask that same question here in the study. And perhaps not surprisingly, we found that there are differences in awareness, uptake, which favor that group that I mentioned. So men, younger, affluent, urban. The overall awareness in Brazil, I think, is fairly good, given the stage. It's about half of the society, judging from our sample, is aware of the open finance. But I think there's a really, really difference in the uptake. And that is the work that is for the central bank, is for the financial service providers and everyone in the ecosystem to focus on, make sure that the uptake improves in those other segments, which is lower income, lower education, older groups, people living in rural areas, etc. Because only then it will really have the wide societal impact. So just to kind of conclude, our study confirms the intuition that both awareness, but even more so uptake, is geared more towards that specific group that I pointed out, and that is very often called early adopters. So we've seen that with other innovations as well, crowdfunding, cryptos, etc.
Yeah.
That would be a very similar demographic. So it's not shocking, and it's not indicating of anything wrong with the implementation. That just happens because this group has the resources, etc., and access to innovation. But it's important to kind of keep monitoring whether that uptake levels up and other parts of the society join, because if not, then something needs to be done about it.
So one number that was that caught my attention was about the awareness of the people so people that were willing to share the information, and I think it was a little counterintuitive when I was looking to the research. So what you can share with us about these findings?
Yeah, that number also was interesting for me personally. We asked people whether they would be willing to share data in exchange for benefits, because that's kind of the main hypothesis for the success of open finance, that people are willing to share their data. And we found that only about 1/3 of respondents were willing to share their data for exchange of specific benefits. And the awareness did play a role in that. More than half of those who were willing to share were aware of what open finance was. So that kind of indicates that it does help with the uptake. But there's probably more on that benefit side that requires attention, and that will eventually mature. What I mean by that is that the more people are aware, and the more people are aware of the benefits, I think the more people will be willing to share their data. So we can look at the numbers here, which show what I was just talking about. But also on the next figure.
So we can go to the next one. Okay.
Yeah. But also on the next figure, we see how that willingness to share is different by a different demographic factors. And here you see a big difference between men and women in their willingness to share, and also how that willingness changes by income, education, age, and region levels. And it does confirm again the pattern that customers who are more affluent, more urban, are significantly more willing to share their data.
Well, we have this hypothesis that people want to share if they know that they have good information. So would be natural to believe that if they are rich, they have like investments, they have like a good like historic, like they pretty sure they want to share with this.
So that's interesting, because that did come up in the research as well, in one form. When we ask about the risks and things that prevent people from sharing, one thing that they named was concerns that if they share the data, it would harm their relationship with their existing banks. So basically, the concern that I share the data, and instead of gaining something, I may actually lose what I already have. Again, this is something that goes to the question of understanding how much people understand what exactly they're sharing and why, and how the data is being used.
Actually, there's no rule that guarantee that.
Right. Of course, yeah. There's no rule, but aside Brazil, in other markets, we've seen that very often the way open banking is used is more to add, to kind of expand the reach rather than to constrain it. Of course, that could happen too.
But to be honest, the other thing that I believe is that all the negative information is available, because we have like these bureaus in Brazil. So if you owe someone, everyone knows about it. So pretty sure that it's difficult to make it worse. Like probably the company knows that you have a lot of debt in the SCR, like it's our system for credit information. You have like this negative information with bureaus. So I think there's other ways than open finance that's possible to.
That's one thing. The other thing is about the income, right? So I mentioned that example that it improved visibility by 30% of what people actually gain, and I don't know if people don't know or don't understand, but if I'm a financial service provider and I just don't know what income you have, I would assume that you have none, or I would, kind of discount what I assume your income might be. And if you share with me through Open Finance your different income sources and your different income, it can only help you, right? So one thing is the negative information and the level of indebtedness and so on, but there's also a lot that I can learn about customer from Open Finance, about the financial stating from the income point of view. And that's where I think Open Finance really is benefiting people by increasing that visibility into their income, which may also include, informal sources of income, right? People have different sources, and Open Finance can help to surface those.
But it's interesting to see. I think that's the first time that I see a difference, actually a meaningful difference between gender, willingness to share information by gender. Never saw anything like this. And
so can I just very quickly, Gabriel, on this one, because I don't know the reason behind, honestly. As again, you start with 3 questions, you end up research with 20. But one thing we have observed generally, because gender gap and the gap between women and men in financial inclusion is a significant one. It's on average about 9% globally, and it's much more in certain markets. And there is something about how infrastructure and services are being built in different parts of the world, where often they are built for men. The data and information about men are used and averaged to come up with designs, etc. And so I don't know if that is in play here, but I think when we are now building the digital public infrastructure and the new systems, we need to be aware of that kind of bias and to make sure that if there's a gap like that, it's not because of the design of the system and how the system is being implemented. Because if that is, we need to fix that.
No, if I think it's a sad scenario, but it's not hard to imagine that if it's still true that many places you have like the men working like having a full-time job outside home, and the women taking care of home, and they don't have active jobs or employee outside home, so they are working at home. So maybe this could affect directly their income, their information in banks, or their willingness to share this information with others. So I think this could impact the way that she looked to herself and how to imagine her financial life, and probably you can have this situation. And I think the other one, that you have a lot of families that rely in one person that we call this in Portuguese as a arrimo de família. It's like the one that's the provider for the whole family. So, and people, I think for financial inclusion, I think it's common that everyone uses the bank account of one person or the credit card of that person or of the family. And the historic data it's there. It's not with the other people. So
right.
This affects the whole the whole way that we see this information.
Absolutely, and we've actually done some experiments and testing even with providers to address this, because if we know that that's what's happening, right? If we know that that's how families operate, can we build products that already have this knowledge built in, instead of just looking at the breadwinner and providing services to the breadwinner. So there is some. Open Finance is a really good enabling system, but also it puts some pressure, let's say, on financial service providers to think creatively about, okay, so how we can address those biases that exist in the society and deliver better services across gender. Yeah.
And let's keep here on the questions. I have a few more.
Okay.
I would like to explore the use cases, so the existing and the emerging case studies. So could you share the case studies that you saw here, What were your impression of our ecosystem here? What banks are doing? Did you manage to see like patterns? So how was your impression? I think we are really like deep here and in what's going on. So it's interesting to see an outside point of view of what's happening here.
Okay, so we can play this game. You kind of tell me, you know, whether that's your impression as well. Um, my first impression. So I've been now coming to Brazil. I don't quite recall which time it is, but several times since the open finance implementation started, and every time talk to the stakeholders and kind of try to get a sense of what news. And I one big change I've observed over the past year is that many financial providers now see the benefits of open finance, and they start thinking very creatively about what are the use cases they want to build for their customer base and how they want to use them to either expand the market or deepen the services that they offer to their customers. That is something that probably happens in every market, but to me, almost in Brazil, it was like, okay, there was this moment of realization for the industry, like this is indeed an opportunity. And why I say that, because, you know, we in many other markets, we do see hesitation, especially of the established players, big banks, who may feel jeopardized by the open finance concept. And then new players may kind of not quite understand how they can benefit from it. And that slows down the implementation. And here in Brazil, I feel like, you know, people really understand where the benefits are and what the opportunities are. So to answer the question, we see diversity of use cases, from personal finance management tools to even business finance management tools. But a lot of what's happening is, of course, happening in credit. So things related to credit scoring and risk assessment, using additional pieces of data to expand the serviceable market, to come up with better terms. Also targeting better the offerings, credit offerings, and lowering the acquisition costs significantly. So that's the use case that you would expect to happen first, because it's very straightforward. There's a demand for the product. The product itself is usually fairly simple, and from the financial service provider perspective, it's a profitable product. What we are expecting to see more is products that will relate to that broader open finance ecosystem, so around insurance, around investment, savings products, and more products for small businesses. Because I think there is a huge opportunity to leverage open finance to improve financial inclusion, if I may say, of small businesses and micro entrepreneurs. So, you know, we're at the beginning, but I feel like there is a lot of interesting products that cater to very specific needs, like facilitation of onboarding, right? Using your existing data to streamline the process of opening an account. So I don't need to fill out all the information. I just share my content. The information is pulled in. I mentioned already the credit risk assessment. So, you know, again, I just share my consent, and all the information about my financial situation are pulled from different sources. Overdraft protection, making sure that, you know, I don't get into difficulties with my accounts just overdrawing one account, and if I do, I get alerted and I can immediately settle the account and avoid late payment fees. So all of these things are useful, good use cases, and to me indicative of a good understanding of what that opportunity is that open finance brings about, and how customers can benefit from it.
Amazing. Actually, my point of view, like in Brazil, I think we. I'm trying to find a better expression, but I think we grow up, like we grown up, because in the beginning we have the first wave of open banking that slash open finance offers was like not so personalized, so they have to be broad as they could be, so they were not so the value proposition was low, because imagine a huge bank uh, telling on TV that they have a benefit for millions of customers. So that's a lot of money. So they have to multiply this million of customers by a small number. So the value proposition is low and is not personalized. And then they were like receiving a lot of information, learning how to work with this. Uh, of course, the ecosystem was improving the APIs in the meanwhile. Everything was getting better, and now I think they are more confident and they are putting open finance. And I think this is a really good proxy of the confidence. They are putting the open finance in the middle of the credit journey, and the credit journey is where the money stands. So, in the end of the day, you have two things that are really important: credit and audience. You need to sell credit to make everything work, and you have the audience because you need people on the app, so you can sell credit when the time comes. Basically, so one day in your life you need money to, I don't know, to buy your home or your cars. I don't know, and on that time the bank gonna make a lot of profit. But so the banks, I think in the beginning they were not so confident with the data and the process, because the conversion rates and all of this, and if they use open finance in the middle of, like, I don't know, like a personal credit, like personal loan journey, they're gonna lose money because they are not going to share information, and neither make the loan. So right now I'm seeing a lot of journeys. You see, for example, in Itaú Unibanco, when you try to make a simulation of credit, in all of products they have a line of open finance that shows how was the value of the installments that were lowered by open finance. So if you share information, like a good information, say, hey, I don't know, your installments dropped 500 reais. Oh my god, like 100 reais or 200 reais because you share this information for other bank. So in order to do this to all the clients, you must be confident in this, the second wave of open finance. That's why I think it's really different from the end of the last year, for example.
Mm-hmm. Just few things which are not really about the study, but things that I've been thinking about a lot is one, that question of how the open finance kind of prompts everyone to get faster on their business intelligence and data analytics development. I led a different project unrelated to open finance, but working with financial service providers on their business intelligence. And I could see how much of potential is left behind just because the data analytical capabilities are not there, right? Open finance in a way forces you to build that capabilities, to set up your core banking system so that it's agile, so that it generates reliable data, build a data scientist and data analytical team, etc. And those are investments that will pay off because you now start seeing things that you couldn't see before. You can use business intelligence to develop new products, to manage your business in a completely new ways. And so in that regard, I think open finance is a catalyst because it basically says, here's the opportunity to share data, but you can only benefit from it if you can work with data in a meaningful way. So I think you're right that there is this kind of threshold that you need to go over. But once you're over that and you have your business intelligence team and you have your data sort of in order, many opportunities open up for the existing and for the new players equally. And so that relates to another thing that I'm fairly excited about and very curious about. What kind of new products we will see eventually emerging, because a lot of the examples, if not all, that I gave is including open finance in the existing journey. So you said it too, right? So you have a defined product, you have a defined journey, and you're now improving that product with open finance. So inevitably we see improvements, but those are more incremental improvements, right? It will just take some time for someone to come and think completely differently about the whole thing and come up with something we have not seen yet. And that is really the big change we're all, I think, kind of waiting for and hoping for. So open finance is already delivering, but I think there's much more that it will deliver as the system again mature and as creative minds kind of come up with a completely new set of products and services.
For sure. And especially in Brazil, when we speak about CBDCs and all this BC hash agenda and this innovation from Banco Central and how this like how you connect the dots, I think pretty sure that we're gonna create stuff that we can't figure out right now what gonna be. And I would like to ask you, what next? So after this research, after this finance, what do you expect next? So after this kind of study, basically what CGAP used to do with this study. So you make a roadshow, you talk with people, and how you plan to keep up with these studies. You mentioned that it's something that could be interesting to make follow up, like I don't know, years later to see what happened. What comes next?
So hopefully a lot of things come next. One of them is to try to answer some of those questions that we are left with after the research. So we are presenting those results to different stakeholders, including those who took part in the study. And it's not that we are kind of lecturing or presenting. It would be even naive to think that we can come from outside and, tell the Brazilian stakeholders, here it is, what the open finance is and what you've been doing. It's more a dialogue or conversation. So we're using the study to kind of prompt conversation about those specific questions. For example, try to figure out, what is driving the difference in uptake and willingness and how to change it, right? So that's one part of our work. But as I mentioned, we also want to repeat that exercise in one way or another later on so that we can start kind of drawing what that uptake, willingness, etc. curve looks like and what are the factors that are influencing it upwards or downwards. Because that's really relevant for our audience, the international community of people who are thinking or implementing open finance in their own markets. And they just want to learn about what works and why it works, what doesn't work and why. So that's one thing. We are also doing a similar study in India, and we're hoping to expand to other markets. Now, of course, the challenge with open banking and open finance is that in many markets it's super new, right? So you don't want to do evaluation of any system just right after it starts. Yeah. So it'll take some more time, but as those different markets mature, we are trying to do the similar exercise in them and then create some sort of comparison so that we see who's doing what and what kind of impact. And then final point we already spoke about, which is the ultimate impact on the customers, right? So far we can observe again how the systems are maturing, what are the API calls, numbers, what are the use cases, etc. But CGAP, I think, has been really good in telling the story of the individual customers. So eventually going and talking to people and asking them, so what does that do to you? Has your life improved? How has it improved as a result of open finance? So again, for that, we need to give the system a little more time, but that's something that we would like to do eventually.
So I would like to thank you here, Ivo. Actually, for those who are listening to us, Ivo just got today here in São Paulo. Basically, he came up directly from the plane, almost this. So it's an honor, and I know it's a privilege to receive you here. So thanks again for making this room in your agenda to share about these insights with us. And I'd like to give you the space as well to to speak with our community, to share any comments that you want. Feel free and to make this last message.
Okay, so first of all, thank you, Gabriel, for having me. It's been really great to talk to you and share the insights, but also listen to your responses and what you have to share, because you've been a great resource for information about open finance in Brazil. As you said, I just landed in Sao Paulo not long ago, so I can use that as an excuse in case my responses were not coherent enough.
Imagine, was amazing.
My apologies. And for the people who are watching us, I don't have any sort of message, but rather a request. If you want to share any sort of feedback or observations or use cases that you think are interesting or areas that you think are worthwhile looking into from the research point of view, please just contact me and share. I am very much open to talk to different people and get input for this work. So please do so if you feel like.
Amazing, guys. I'm gonna let the link for Ivo profile, LinkedIn profile here on the comments of the episode. Thank you again for watching us. We see you next Wednesday with another great expert here talking with us. And of course, you're gonna help us a lot sharing this episode. I'm pretty sure that you like it. It was really special. And that's it. One more episode here. Thank you again. Bye bye. See you.